Good morning, viewers. It's Friday morning, May 2, 2025, and I'm your Sunil Thakker, Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. US stocks advanced on Thursday, with the Dow and S&P 500 posting their eighth straight session of gains after strong results from mega caps Microsoft and Meta eased concerns about artificial intelligence spending. Better than expected earnings from Microsoft and Meta platforms boosted markets, reassuring investors of the relative resilience of the magnificent seven tech giants to tariff uncertainty. Investors also welcome tentative signs of thawing US China tensions. Beijing backed social media accounts said US officials had reached out to discuss trade, something China sees little downside in exploring. Stocks rallied, led by the NASDAQ Composite. The tech heavy index is starting May higher than where it traded prior to Trump's Liberation Day tariff announcement on April 2, which touched off a tumultuous month for US stocks. Eight straight sessions of gains mark the longest run for the Dow in a year and the longest for the S&P since August last year. The Dow Jones Industrial Average rose 84 points, or 0.21% to 40,753. The S&P 500 gained 35 points, or 0.63% to 5,604, and the Nasdaq Composite gained 264 points, or 1.52% to 17,711. Meanwhile, Meta and Microsoft shares both zoomed higher, and other big tech stocks also mostly rallied. Facebook parent Meta reported strong sales and said growth would remain steady, assuaging concerns tariffs would harm its digital ads business, a chunk of which comes from Chinese companies. Meta Platforms gained 4.2% and closed at its highest since April 9 after posting higher than expected revenue on the back of a strong advertising performance. Microsoft, too, indicated that big corporate clients aren't slashing technology budgets just yet. Microsoft surged 7.6% and closed at its highest level since late January, driven by an upbeat quarterly growth forecast for its cloud computing business, Azure. The gains briefly pushed Microsoft above Apple to become the world's largest valuable company. The results helped allay fears the massive spending on AI in recent years would not be rewarded and eased concerns that potential tariffs could dent economic growth. Certainly, when a company of Microsoft size and Meta size puts up great earnings, it is proof enough that their run is not over. After the closing bell, fellow heavyweight Amazon.com fell nearly 5% after its earnings declined as growth in its cloud unit lagged, while Magnificent Seven peer Apple was also trading low by nearly 2.4%. Amazon Web Services, the company's cloud unit, is showing signs of weakness with its 16.9% increase in first quarter revenue to $29.27 billion, missing expectations for 17.4% growth and $30.9 billion in sales. Shares of the company fell as much as 5% in after hours trading before leveling off to a roughly 2% drop. The Cupertino, California based company, Apple, said its sales and profit for the fiscal second quarter ended March 29 were $95.3 billion and $1.65 per share, respectively, compared with the analyst estimates of $94.68 billion and $1.63 per share. While the results were better than analysts had expected, investors are focused on how tariff concerns will play out in the coming quarter. Apple shares were down 2.4% in after hours trading after the results were released. During the day, Apple shares had alternated between modest gains and losses before closing up 0.4% after a federal judge ruled the iPhone maker had violated a U.S. court order to reform its App Store. Tech rose 2.2% and communication services rose 1.6%, leading sector gains. Meanwhile, General Motors offered a rather different update. GM said it's expected their financial hit from tariffs could reach $5 billion and slashed annual guidance. And McDonald's said revenue dropped last quarter as American consumers grappled with uncertainty and reduced their fast food trips. McDonald's also reported earnings and shares declined 1.9% to cap gains on the Dow after posting a surprise drop in first quarter global sales. Lilly reported quarterly results that topped expectations, but shares tumbled 11.7% after CVS Health's decision to drop Lilly's obesity drug Zepbound from some lists of medicine it covers for reimbursement. The healthcare sector slumped 2.8% as the worst performer on the session. Mobile chip designer Qualcomm plunged 8.9% after it forecast a hit to revenue from the trade war. Economic data painted a mixed picture. Weekly jobless claims, the latest in the string of labor market data this week ahead of Friday's government payrolls report, showed layoffs increased more than expected last week, potentially hinting at a pickup in jobs cuts following tariffs. ISM PMI data showed US manufacturing contracted further in April, though slightly less than economists polled by Reuters had expected. Input prices were elevated. That followed Wednesday's data showing the US economy contracted the first time in 3 years in the last quarter. Treasury Secretary Scott Bessent hinted the Federal Reserve ought to consider rate cuts by pointing to how yields on shorter dated government bonds have moved steadily lower in recent weeks. Benchmark Treasury yields rose. The yield on the 10-year notes ended at 4.228%, up from 4.173% on Wednesday. Gold prices fell. A strengthening dollar and easing trade tensions hit the precious metal, which closed 2.9% lower. My take: what drove markets from sell America to safe America just in a month? Just a month ago, stocks had tanked into a chasm, a free fall of huge proportions only comparable to the anecdotal abyss. This was on President Trump's Liberation Day. Days later, the market made a complete U turn, having staged a major rebound since that fateful day when President Trump's tariff trade war sent stocks reeling. It is a remarkable comeback from just 4 weeks ago when plummeting stock and bond prices triggered a 90-day pause on many planned tariffs. What drove the recovery and where does it still hurt? 1. Mega cap tech stocks such as Apple and Nvidia dragged indices lower after Trump's tariff announcement. Now they're the biggest drivers of the rebound. Once the Trump administration said it would exempt phones, computers, and other tech devices from its 145% tariffs on imports from China, Apple alone has added over $550 billion in market capitalization since the stock market's April 8th bottom. Another apple of the eye and market darling, Nvidia, got a similar boost after the announcement. Number two, the utilities and consumer staple sectors have been among the best performers since the lows, as they are typically viewed as safer bets during slowdowns. In contrast, financials, materials, and energy companies tend to do worse when growth slows, and their shares have lagged behind during the recent rally. Number three, the tariff fueled market rout initially sparked a flight to safer investments, driving treasury yields lower. Of late, investors are warming up to optimism that the Trump administration will back off from its most extreme trade policies. 4. Similar fears are hurting the dollar, which has dropped sharply against other major currencies this year, in a sign that investors' confidence in the US might still be shaken. And 5. Oil prices tumbled earlier in April to 4 year lows, pushed down by fears that the global slowdown will reduce demand for fuel. Shedding US stocks, bonds, and the dollar became known as the Sell America trade earlier in April, with some investors worried that trade disruptions would eventually challenge America's financial primacy. Bonds and dollars are now making a comeback, though gingerly. Stocks, on the other hand, are making merry, riding the earnings growth and on the back of a portion of economic data pointing to better interest rates. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it is all about money.